Can we talk a little bit about, from an investing perspective in general and an investment thesis in general, what does it mean to be funded by UK Aid, and UK Aid or an aid organization in general being your LP? How does that inform the investment thesis that you have and the types of investment decisions that you make?
In terms of our shareholder being the UK government, the mandate that they have given us is to try to support the development of the financial market in order to reduce poverty. So it's part of their commitment and desire to see the strengthening of financial markets in Africa and see that strengthening so that it can create jobs and reduce poverty on the continent.
And so I mentioned just before we started to hit record it, things like public goods, and maybe this gets into impact investing in general, but this idea that development funding can fill gaps where either government or the private markets don't fill gaps or are creating gaps. Can you talk a little bit about that? Is that something that you explicitly look for to say, like, where is there a space that we can play where the private market doesn't exist or the governments aren't necessarily filling a gap? Is that like an explicit or even implicit consideration as you make investment inquiries and decisions?
Well, I think it's really about, in my kind of specialization, since I'm running an investment entity for the UK government, it's really about enabling the blending of capital. We do expect to get a return on our investments, but we are mandated to take potentially more risk than other investors because we see that there could be a significant impact of investing that capital by its ability to crowd in not only commercial capital, but enhance what is being funded potentially from the public sector. So the better good of what we do is really to try to leverage the fact that we can take that risk in order to bring more capital to bear on the investments that we make.
You just talked about risk and the ability, given your investment mandate, to be able to take more risk. What does that actually look like? What are maybe riskier investments or the types of things that you might have the risk appetite or your organization might have the risk appetite for that perhaps just typical commercial investors do not have the risk appetite for?
Well, it's early stage risk. It's really the concept of pioneering new solutions that are early in their evolution or in their execution, rather. And so there are risks associated with it, which could be a regulatory risk because it's something that's new, or there's certain barriers that the entity needs to address in order to expand because they need to educate the regulator, et cetera. So it's that concept of something that's new, hasn't been tried before. So it's that kind of early stage risk capital that we are wanting to be able to provide to test these innovative solutions that might solve a particular market failure, and then provide an opportunity for the promoters to demonstrate the case that would then lend itself to other investors having better appetite or higher appetite to participate.
Now, just getting into MFS Africa, can you talk a little bit about that investment? What was it about them and how they fit into the thesis and all that we've just been talking about that compelled FSD to make an investment in them?
Well, because we are supporting financial market development in order to alleviate poverty, and we all know that people are sending money across borders to their family and friends, but the cost of doing that is still very high. And so part of the market failure that has led to that high cost is that these remittance agents are not interoperable. And so MFS Africa provided a solution to that. And we felt that interoperability was going to help increase the ability of people to send and receive money, which was important as a way to provide finance or provide cash to your loved ones that need it. and to reduce the cost of that, which was important because the cost of doing that is high, but also to make it instantaneous. So it's not a payment that is made and then you're kind of waiting a number of days before you receive it. So MFS Africa offered a solution to that. During COVID, we're very concerned that remittances will fall. And it's interesting to see that that wasn't the case at all. In fact, it just proved the case that we do need to move away from cash into digital. And we do need to find innovative solutions to make sure that there is more use cases for digital, so that we move towards a more digital world where businesses and consumers can operate smoothly over a digital platform. And I think MFS Africa is going to be part of that story.